Hello everybody, it's me the Boss Dog, and today we're going to look at the buys and sells and dividends in my portfolio as of the week ending the 7th of January. And just a little ask as well, if you're getting value from this video, like and subscribe. I'm nearing 100 subs, and I promised myself when I get there I'll get myself a more professional setup, maybe a new camera and a proper mic. So that's the target. Otherwise, let's get on with it. Alright, so in terms of my high-level summary, I'm actually pretty pleased. The week was wild. It got off to a really great start. On the Monday, it was only the US stocks that were open, not the UK ones, and they did great. And then on Tuesday, although the US stocks fell back a little bit, my largest holding went on a bit of a run, so that was compensated. And then that largest holding started to give back its run, as well as obviously the some turmoil in the markets, if we can call it that. I don't think it was like true turmoil, but definitely if you have heavy exposure to the tech sector, I can imagine it felt a bit worse. Luckily for me personally, I'm relatively light on the tech sector, and as you'll see in a second, I've actually been using some of the selling off to buy myself, so that's been exciting to be acting contrarian still. Yeah, good fun. Honestly, it was a fairly big week for trading, right? Even though I've got a 106k portfolio, to buy and sell 6% of that portfolio in a week is no joke. So that's what we did. And yeah, I felt like I did sell out some of my value holdings, took modest to reasonable profits in those, and basically just wanted to redeploy that. So it just felt like opportunities I didn't want to pass up on, basically. I didn't add any capital this week. Although I expected to add less capital across the whole of January, I was planning to add sort of 250 to 400 this week, but decided not to. The main reason for that was just because I wanted to sort of keep enough powder if the tech sell-off continues later in the month. Like, we haven't got tons of spare money. December was pretty expensive for reasons I went into on my month-end wealth video. So we haven't got tons of capital to add to it anyway, and I just decided that actually I'd sit on my hands this week and basically build up some capital, opportunity to add some capital in future weeks if the sell-off continued. So that was the plan here. Just the one divvy this week. It's actually my first dividend in about 6 weeks, so that feels pretty good because I didn't get any over December. This is in Wiki, however we're pronouncing it these days. But anyway, the REIT, mostly championed, I think, by Joseph Carlson. But I've had a look at it myself. For me, anything underneath 30 is a buy. So I've got an average here of 29.42, I think it is, so a little bit down at the moment, but that's fine. I don't think this is a huge bargain at 29 either, to be fair. I think it's like a $32 somewhere around there. I think though it's moving in the right direction on basically all counts, and for me it's one of the more exciting REITs. I like a gamble. I'm very romantic about Vegas. I really must get to go there sooner or later, and I know by the way, only about 50% of its revenue is from Vegas, although it tends to be in some of the big marquee properties, but it's starting to diversify, and that's no bad thing either. So that's my high level summary, and now let's look at what I've been buying this week. Eventually. All right, so I've highlighted here the ones I want to talk about. They're in green. If anyone has any questions about the other stuff, let me know, but it's mostly just outside of the ones highlighted green, it's mostly about just building stakes over time in sort of companies that are one thing or another but allow me to meet my objectives that I have this year. So we'll start with the big one here, which is a new position I have in CRM, Salesforce. So I looked at this company last year and decided it was too expensive and not for me. It released what the market perceived as disappointing update and guidance. For me though, I thought it was solid. It probably, maybe it deserved the fall because it was pretty expensive before, and I would say even at 230, it's not exactly the bargain of the day. I'd be really excited if this went closer to 200 or even underneath it. I'd actually move some more serious capital for it, but for now, with like 1.5% of my portfolio, this is probably me done until it sort of goes under 310. Then I'll start buying again, or if it goes under that. But for me, I'm happy to have kind of a medium-sized stake in what I do think is a quality business, even if it's expensive. I really like the whole ecosystem that the company's building. Like, yeah, okay, some of their share printing dilution isn't great long term, but Salesforce has been really good at sort of building that ecosystem and basically adding value to what it's been buying. My wife works with Salesforce and does projects around it and loves it. I work with Tableau, one of their visualization tools, and again, it's a very good tool. And it's all about adding value to back-end systems, which is something I'm quite passionate about in the telecoms industry where I work. Because I think actually companies have been quite poor at adding value via back-end systems, and I think there is a lot of value add in these kind of services, and evidently Salesforce is building one of the best ones out there. So for me, that makes me long-term optimistic about this company, and so I wanted to buy a stake in it whilst it was having that fall. In terms of other stakes I've been buying this week, so I've just grouped my tech ones here. So we'll start with Amkor. This is a fairly small, actually, semiconductor testing facility, the second biggest, I believe, but also going places. It's got a new facility coming online 2023. So far, its profit margins are relatively modest, especially in this space, but it trades on like a 16 PE. Like in the semiconductor space, just feels like too good not to buy. And again, for me, who this year wants to look at kind of small to mid but proven companies, this is exactly in the ballpark. And it also ticks a couple of other boxes in terms of being a tech sector where I've been traditionally light, as well as a US listed stock where again I'm underweight, right? Only about 35% of my portfolio is in the US at the moment. I'm keen to get that certainly above 40, but closer to 50. So this ticks a lot of boxes for me, and actually I'm considering making it a much larger holding than it is. Currently it's about 0.7% of my portfolio, and I'm just basically building a stake as and when I can. So I'm really excited about this one. It was actually suggested by somebody in Paul Briscoe's Discord, goes by the name of Jackal. So thank you very much for that, sir, if you're watching this video, because yeah, I really like this company. I think it's kind of flying under the radar, and I'm excited for it. Amazon I bought a little bit more of. I have been averaging into some of the larger tech very slowly, but Amazon a little bit faster, just because I think at 32.50 it's a good buy price. So that feels really good for me. Like, I don't think Amazon is overpriced in the same way that sort of Microsoft and Apple are. Maybe overpriced, right? I mean, it's whatever people are willing to pay for it, but they're really expensive at the moment after the year that they've had, whereas Amazon doesn't seem like it's in the same ballpark. So for me, it's a good buying opportunity. Genius is one of my more speculative plays, and I am quite red on this at the moment, down like 25%. But I've had a look at the business case and everything else, and I'm absolutely fine with it. So I decided to take the opportunity to buy at 702, so bring my average down a little bit more. I'm around $10 in terms of this, so again, I'm pretty red on this at the moment, and it's my third largest holding, so that's definitely pulling things down. But again, I still really like it, so I'm buying at this sort of level. And lastly, SMT, this is Scottish Mortgage Investment Trust. This is a UK listed but primarily Nasdaq focused company. Similar play really. I treat it more like an ETF. I know it's not, by the way, but that's how I see this, as an ETF play on America's tech sector. So again, this is just another opportunity for me to buy into that. So that's all of that. Next up here, we've got S4 Capital. So I decided to basically max out my level that I'm comfortable holding. This is an unproven, currently very small advertising company. However, it's led by Sir Martin Sorrell. He pioneered what's now a very large marketing company, and more or less decided it wasn't for him anymore. I don't know quite about the details, but anyway, he fell out of love with the company that he founded. Everyone agrees, however, he's basically a titan of the advertising world, whether you love him or hate him. To me, he seems like an incredibly arrogant man, but again, he's a hugely successful man who really knows what he's talking about when it comes to advertising. So it's very much a play on his expertise and history. And the stock's been beaten up since they announced that they were basically pushing back earnings expectations to whale hunting, right, to go for bigger customers, and that was sort of depressing margins and all those other things. But again, this is a company moving in the right direction for me, so I decided to bring my average down to an average that I really like, 572 here. I was at 600 odd before, and this to me is a longer term holding actually. But I want it to be at this kind of level because it's not without risk, and I think I'm happy in a sector that I don't really understand, being advertising, and really I'm just betting on his understanding of that sector and hoping to make money from it. So that's the plan there. I also want to talk about Polymetal. This is pretty red for me at the moment. Like, my average here is 1418. If you look at the stock, it's struggling to stay above 1200. Now, in fairness, it's a gold and silver play. It's my main commodities hedge specifically. It's obviously dependent on commodity, and actually in kind of a bull market with commodity pricing under pressure, I'm actually okay with it being very red, and for me it's just an opportunity for me to reduce my average further. My long-term plan is to keep this at 5%. That's currently where it is, but again, I just wanted to kind of buy a little bit now so that as I keep adding capital, there's no sort of pressure or reason for that to fall behind, because actually I do think it's a bit beaten up. Also as well, though, it has like a 7% yield, and that feels pretty good as well, so I'm fine with that being red, honestly. And last but not least is Gamma. So this is a company in my sector and expertise that I know very well. Done a video on it, and basically for me it's a real buy at these sort of levels. I personally believe the company is worth 2,400. That is on the upside of analyst estimates to go to about 2,500. But again, I think I know the company very well, and for me this is just too good not to keep buying. It's my, I think, fourth largest company, but it just seems too good. I just want it. Again, it fits in with my aims to have small to medium but proven businesses, and I just want to buy it. And at 1600p for me, this is basically 50% undervalued, right? So I just want to buy it. Honestly, as well, I've had a chat with myself, reread some things regarding Gamma, and I've decided that if this goes to 1500, I'm going to make a really aggressive move on it, similar to what I did with National Express or Huntsman or BMY, like companies I really strongly believe in. Basically, look to sell out of various other holdings and really just double my stake, basically, because I think at these kind of levels it's ridiculous. The quality of the company here, again, it's you might look at it and think PE levels, it's not particularly cheap, but again, look at the underlying goodness of the business. That's kind of how I feel about this. So for me, it was a chance to add actually a reasonable number of shares into this. This sort of added almost 10% to my holdings. So again, a relatively big move this week. So that's what I've been doing, basically. So anyway, outside of that, let's have a look at what I sold, because obviously I had to do a fair bit of selling in order to buy this sort of stuff. Alright, so next on to shares I sold, and this is the second time I'm doing this because my laptop just ran out of power, so let's try and make it as faithful as the first version was. So first up, and the big move here was I sold a significant holding from EPD, which I think was my 5th largest holding. I've more or less treated EPD as a store of value. It's been stable, reliable. I think it's the safest of all the pipeline businesses. For me as a Brit, I don't have to worry about the tax forms or anything like that, and I get the advantage of, because this is a distribution rather than a dividend, I don't have to pay the 15% withholding tax. So the big fat dividend here is pretty good. I mean, it's above my long-term aims for investing in ISAs by itself. So again, I'm really confident in this business. I actually think it is a bit underloved and deserves a higher share price, but I'm not expecting it to move too much, although it probably will run up before its ex-divi date. It's typically what it does. And they did just increase that dividend and all that other good stuff. But for me, I decided that I would sell a fair chunk of it, as you can see, primarily to buy tech stock again, in this case Salesforce and Amkor, as well as some Vici. So yeah, that's my rationale here. I do plan to still buy, especially anything under 22 for me is a really screaming buy. It's at least 25% higher than that in my opinion, as well as having the 8% plus dividend yield, which again I get to keep all of it. So that's very nice. Next up here, I wanted to talk about Games Workshop because I'm very bullish about it. I talk about it a lot in Discord. A couple of people have asked me to do a video on it because because I am bullish. I think I understand the company very well. As well as that, though, I've been keeping up with the law, and for me, it's really compelling. It's especially this year. I'm really expecting some good stuff. I'm also expecting that the numbers are going to show continued awesomeness. I think the fears are overdone in terms of community engagement being poor and 3D printing. Those risks have been around for a while. Maybe 3D printing is getting very good, but again, if you're serious about the hobby, I think there's you want to be buying the real McCoy. They are quality, but it's very expensive, but I get it. But for me, yeah, I think those fears are overblown, and also they've got a lot of IP promising stuff coming up, and I'm also never really bought into the idea that people who got into Warhammer primarily during lockdown are suddenly going to emerge from their basements, right? Like nerds like basements and nerds like Warhammer. And I joke, but actually I think that the likes of Henry Cavill, for example, who's spoken about his love for Warhammer quite a lot, it's starting to kind of escape from basements and that kind of dusty image. The company's also been investing in its back-end systems. They upgraded their CRM system, funnily enough, which is also partly what started their resurgence from 2016, right? They changed their business model, including upgrading all their CRM stuff, and they've just felt the need to upgrade it again, which presumably means that they're very busy with orders. So again, all moving in the right direction from my opinion, and for me, anything even around 100, I think anything under 100 is just a really good buy for a company of this quality. So it's not exactly like I had got a great sales price here, because I had previously bought it into Games Workshop at 98 and sold at 118. So this is my second time in Games Workshop in a meaningful way. But again, here I'm waiting to get closer to 120. But I just wanted to put some money toward S4 Capital, and now that I've got it to a level where I'm happy with it, I don't plan on selling any more Games Workshop, certainly not for S4. Obviously, if Amazon went down to 2800, yeah, okay, I'll probably sell all of my Games Workshop because there's probably more upside there. By the way, the reason I sometimes group these shares, the reason why I'm talking about Games Workshop buying Amazon instead of, say, Gamma, is because they sit in different portfolios, right? I've got 3 active investment accounts, and for me, it's just easier to keep them separate. So that's how I choose to look at it. Next up, I want to talk about Aviva. So again, in Discord, I'm pretty open about everything anyway, as you guys probably know if you watch my video. I have 11% of my portfolio in 3 UK insurers. My general approach is that the UK has better insurers, the US has better banks. That's how I look at it. The UK, I think, has some fantastic insurers, not just the 3 that I have, being Phoenix, Aviva and Elgen, but lots of others as well, actually. So I think it's the place to be for insurance, and I think the UK is still recognised as the world leader for insurance, right? You've got things like Lloyd's of London, and in several sectors within insurance, the UK basically drives the market. So I think it's kind of like got that pedigree, as well as some very good companies. So with AV specifically, this is a 400-year-old company, so older than many countries, and it's been around for ages. But because of that, it has a lot of baggage. Its new CEO came in, has basically done a fantastic job, in my opinion, about turning this company around. It was a bit sold off when, during the last update, which was solid, there was no announcement of a special dividend, which basically everyone and their dog has been expecting. They've done a lot of disposals, simplified their business, and basically they have a lot of cash. And myself included, I was a little bit disappointed, but I like the underlying direction of the business. My plan here is to basically wait for their half-year results, enjoy the special divvy that they basically promised, and see what shape the business is in and decide what to do with it. But for me, I decided to trim back down to 800. I had been buying at like 390. Now it's back at like 426. And yeah, if it goes underneath 400 again, I'll look to put some money on it. I'm hoping here for a 450 kind of target, but I think a lot of the share price is going to be influenced depending on what kind of special they're going to be putting on it. And by the way, this company, like a lot of UK insurers, yields at like 6+%. So again, there's the standard dividends to look forward to, as well as potentially, still another 5% capital growth for me. By the way, with Aviva, I chose to sell that to buy some Gamma at 16. I basically told myself that if Gamma went down to 16 quid, I was going to buy some more of it, and that's what I did. Last but not least, I do feel, even though I only sold like a tiny portion of my holding in National Express, it's my largest holding still by some margin. It's almost 25% of my portfolio. Nobody else talks about it as far as I can tell. I just think it's one of those like unsexy stocks that's been misunderstood by the market. It's primarily not necessary for its long-term survival to have like lockdown cease. A lot of its revenue now is from contracted, right? They get it regardless of passenger volumes. That's fantastic. They've basically taken the last year to significantly improve the resilience of their business, which I think is great. Anything they've bought has improved. I was reading case studies about the work they've done in Spain. The performance improvement is just remarkable. So although they are in the process of buying a fairly large company called Stagecoach, which is a significant play, Stagecoach certainly has its problems. Again, the experience from Spain makes me confident, and I think National Express is worth about 330. It did have a tempting run up this week, but it didn't quite breach the 270. And by the way, in case you're wondering why 270, I have spoken about this before, but my plan here is I'm so overweight in National Express that even though I think it's undervalued, I'm going to look to trim 5% of my stake at 270, 280, 290 or 300. What that will mean is that at 300, I'll have 8,000 shares worth 24 grand. Currently, I have 10,000 worth about 25.5. So I'll still have a huge stake in National Express, but it's really just to rebalance my portfolio. So on Tuesday, this had a real run up and got very close to the 270 level. It didn't quite get there, it got to like 268. But I decided to sell 100 very close to 270. I wish I'd sold more, because since then it's fallen back about 6%. But anyway, I think at 250 here, you could pick up a real bargain. Yeah, my long-term average here is 234. I started buying this at 270, funnily enough, and then I made some big moves when it was like 217 to bring that down quite a lot. So, but yeah, I feel compelled to talk about National Express. This is actually going to be the first analysis video that I do. I'm already about a third of the way through it, so I hope to get it to you next week, explaining why I'm so bullish on National Express and have got 20 grand plus tied up in it. So, but anyway, I did decide to trim just a smidge, so I wanted to address that. Anyway, slightly longer than normal. I'm trying this as a new format just to make it a bit more informative regarding the buys and sells and my reasons for them. A little bit more company details as well, if anyone not aware. Hopefully that's interesting, useful, etc. I definitely welcome feedback, so feel free to mention anything, or just say thanks very much. That also works as well. Anyway, thank you very much for watching, everyone. I've been the Boss Hog, and good luck with your investing. Bye for now.